My dream is to make my own hedge fund one day, and I keep learning from best investors and invite you to do it with me. So hi investors, and today we are diving into a fascinating as usual letter from Bridgewater Associates, one of the world's largest hedge funds. Everybody knows Ray Dalio. Now you might be thinking, I'm just a passive investor, why should I care? Well, even if you are not actively trading, understanding the big picture economic trends can help you to make smarter long-term decisions with your money and assets. Plus, these hedge fund bigwigs have access to data and analysis most of us can only dream of. So let's peek behind the curtain and see what Bridgewater's top minds are thinking about the economy and markets in mid-2024. Trust me, by the end of this video you'll have some seriously valuable insights to impress your friends at your next investment club meeting. Main themes from this letter. First, economic durability. Bridgewater believes the current economic expansion is unusually resilient. They are not seeing the typical warning signs that often precede a recession. Here is a key quote. When we look at the mechanics of the expansion, examining who is spending money, what is driving their spending, and how the spending is being financed, we see an expansion that is likely to be unusually durable. They point out that households are primarily spending from income, not relying on debt. This makes consumer spending less vulnerable to interest rate hikes. Second, government spending. A major driver of economic activity is good old Uncle Sam. The letter states, government borrowing, unlike private sector borrowing, is subject to political choices and not directly sensitive to what the interest rate is. Bridgewater expects high levels of government spending to continue, regardless of who wins the upcoming US elections. They also note that the other countries might follow suit due to various pressures. Third, business investment. Companies are spending money, but not in the usual way. Instead of borrowing to invest, they are using cash reserves. And get this, they are spending on long-term projects like AI, energy transition, and rebuilding supply chains. As the letter puts it, these types of spendings are meant to mitigate risks or prepare the ground for eventual demand that may be many years away, making them quite durable to the inevitable ups and downs in sentiment. Central bank policy. Bridgewater observes that central banks are starting to ease monetary policy earlier than usual. Even with inflation still above target, they warn this could make it harder to bring inflation all the way down to central bank targets. Data and charts shows here. Now, unfortunately, this letter doesn't include any specific charts or tables, but let's talk about some of the data points they mention. First, government deficits. Bridgewater notes that the US is running the largest fiscal deficit we've experienced outside of wartime. That's a big deal, folks. Second, interest rates. They mention that the yield curve is inverted to a degree typically only seen in recessions. For those who need a refresher, an inverted yield curve is when short-term interest rates are higher than long-term rates. It's often seen as a recession warning sign. Third, equity valuations. The letter states that equity valuations are already accounting for both a durable expansion and a profitable AI revolution. In other words, stocks might be pricing in a lot of optimism already. And investment implications. So what does all this mean for your portfolio? Bridgewater has some thoughts. Equities versus bonds. They see stocks as slightly more attractive than bonds right now, but caution that a lot of good news is already priced in. Second, diversification is key. You're tired of this. But with many portfolios heavily concentrated in United States stocks, Bridgewater suggests looking at other parts of the world, especially Asian markets, with different economic cycles. Be prepared for surprises. Third, while they expect the expansions to continue, they advise having some protection against potential economic shocks. 4. Where's the alpha opportunities? For the active investors out there, Bridgewater sees potential in AI beneficiaries, value stocks, and companies in markets with diverging economic conditions. Alright, let's wrap this up. The main takeaways for investors are: first, the economic expansion looks durable, but that doesn't necessarily mean smooth sailing for markets. Second, government spendings and business investment in long-term projects are key drivers to watch. Third, diversification nowadays is crucial, especially considering potential overvaluation in US markets. 4. Keep an eye on inflation and central bank policies. They could throw some curveballs. Remember, even as a passive investor, staying informed about these big picture trends can help you make better long-term decisions. And hey, if nothing else, you can now sound super smart at your next dinner party when someone brings up the economy, and you can easily argue with them on big data. Thanks for watching, and don't forget to like, subscribe, and leave a comment telling us what you think about Bridgewater's outlook. Until next time, happy investing. You can see my results as a portfolio manager here. Thank you.